All right, today we're going to talk about a number so huge, it's literally redrawing the map of global trade. We're talking about a trillion-dollar milestone that has just been hit for the very first time. We're going to break down what it is, how it happened, and why it matters to, well, pretty much everyone. So let's just start with the number itself, the one at the heart of this whole story. $1 trillion. In November 2025, for the first time in history, a single country's annual trade surplus hit this staggering figure.
Yep, you heard that right. China's goods trade surplus just blew past the $1 trillion mark. But look, this isn't just some big flashy number for a headline. It's a huge signal that the deep imbalances in the global economy are actually getting more intense.
Okay, so how in the world did we get here? How did China hit this unbelievable milestone? Well, when you look at the numbers, it's all about a gap that's just getting wider and wider. The dynamic is actually pretty simple. In November 2025, exports just shot up, right? Almost 6% higher than the year before. But at the same time, imports, well, they barely budged, growing at a really sluggish pace. And it's that gap, that simple difference between what they're selling and what they're buying, that sent this surplus into the stratosphere. And just so we're all on the same page, let's do a quick refresher on what a trade surplus actually is. It's pretty straightforward, really. It's when a country sells a ton more stuff to the rest of the world than it buys back. Think of it like a store that sells way more than it buys in supplies. What do you get? A massive profit. Now, a surplus this massive, this doesn't just happen by accident, right? It took a really unique mix of factors, all coming together to create the perfect conditions for this export explosion. So let's break down how we got here.
It's really like a perfect storm of economic forces all hitting at once. You've got strong demand from other countries, you've got cost advantages for Chinese goods, and this is key, you have some serious weakness back home. All of that pushed Chinese companies to go look for customers abroad. So let's dig into the four main drivers.
Okay, so here's how it all came together. First, China got really smart about finding new customers, branching out into places like the EU and Southeast Asia. Second, their currency got a bit weaker, which basically put their exports on sale. Third, and this is a big one, demand back home was just flat. So manufacturers had no choice but to sell their stuff overseas. And finally, their supply chains proved to be incredibly nimble, adapting to all these new global trade winds.
You know, a surplus this huge doesn't just stay in one place. It creates these massive ripple effects that spread out all across the globe. And they're not always good. And you can see this playing out right here. It's a dramatic pivot in who China is trading with. While exports to the U.S. absolutely cratered, we're talking down almost 29% in November, China more than made up for it with huge growth in shipments to places like the European Union and Southeast Asia.
So what does all this mean for the rest of the world? Well, for one, it means way more competition for their own local manufacturers. It also means you could see currencies start to get a little wacky as all this money flows into China. And almost certainly it means more tension, more strain on trade relationships, and a bigger risk of new tariffs and trade fights.
This really gets to the heart of the matter, especially for U.S.-China relations, but honestly for the whole world. The old playbook, things like tariffs, they might not be enough anymore. As China diversifies its customer base, its trade becomes way more global, and it's just not as reliant on any single market. That means any one country's ability to pressure them gets a whole lot weaker.
So you might look at this giant surplus and think, wow, that's a sign of incredible strength on the world stage. And in some ways, it is. But it also shines a big, bright spotlight on a really serious weakness inside China's own economy.
This is the big paradox right here. On one side, you have this absolutely resilient, world-class manufacturing machine that can produce stuff for the entire planet. But on the other side, you have really sluggish demand at home. China's own consumers just aren't buying enough, thanks to things like the slump in the property market and people just being super cautious with their money.
And look, Beijing knows this can't last. Relying this much on exports is not a sustainable long-term plan. They've already started signaling a major policy shift coming in 2026. The goal? To pivot, to get their own internal economy fired up, maybe through more government spending or even cutting interest rates to get people spending again.
So it's really important to see this record-breaking surplus not as some kind of finish line, but as a crossroads. It's a major turning point both for China and for the rest of the world, and what happens next is going to be critical.
And there are some big risks on the horizon that could seriously mess with this export-driven model. You could see a major backlash from trading partners, like the EU slapping on new tariffs. A global recession could totally crush demand overnight. And what if those domestic reforms don't work? Well, then China would be even more exposed to shocks from the outside world.
And this is maybe the most important part to understand. This isn't the old story about cheap toys and t-shirts anymore. Not at all. The whole game is changing. China is starting to dominate in really advanced manufacturing sectors. I'm talking electric vehicles, semiconductors, green tech. They're grabbing more and more of the market for the industries that are literally going to define our future.
So in the end, this trillion-dollar number, it's more than a statistic. It forces a massive question on the rest of the world. What do you do now? How do you respond? Is the answer going to be a backlash with more tariffs, a major realignment of supply chains, or maybe a new push for global cooperation? The answer to that question is going to define the next chapter of global trade for all of us.